This is a little bit of a midweek analysis of a trade on Wednesday. Trade on the 2nd of April. So, just so you know, there's a framework where, say, the algorithm looks for the parity or even the expansion leg of the market after consolidation that takes place. And usually when it takes out an old high or low, you kind of look for is a rejection block. Me personally, all the blockers where I enter, but the up or down closed candle would be my priority. Fair value gaps is what I look for. And if you're looking for a bearish opportunity, it would be hold low, key low slash double bottom. Look how those levels are treated to determine how you're going to predict the next move, the next expansion. One can feel frustrated just due to not being prepared. And today I wasn't prepared. Life was a bit rushed today, so I missed the opportunity. And I will go through the opportunity with you guys to kind of explain where you could have an expression of frustration arise. It could be due to just not feeling like you're in sync with the market. So from my perspective, that's why I didn't take this trade. So I'll show you what took place step by step. This was an opportunity for the expansion to take out here, which it did. But what did it do? Wait, it was not a displacement. So you can imagine or predict the next step from a 4 hour to take place. The next step of the 4 hour was a rejection block, which is here. This is parity with that wick because it's taken out an objective as a possibility to be a rejection block. Once that takes place, this is where we can potentially look for another objective in the opposite direction to see if our prediction of direction is correct. So from that, the yellow line is the completion of the rejection block levels being hit. So you see, mostly like me personally, I'll wait until the market has retraced above 25% to come and really consider a PDRA parity. So you can imagine this up close candle was above 25% while expanding. It wicked here, pushed down, so I would be focusing primarily on this push. As I see that push and the violation above the high, one can enter. One can enter, but time and price needs to link up first. From that link up, it was 11.15. That's not my trading hours. So one can have the objective of a PD array. This PD array is not on the list, but it's a down close candle. ICT does say that this is the real support and resistance. But okay, so we came here. This would be an objective. But you can also take the fair value gap. But we see that the market just went straight through that. So the next objective is this down close candle. The down close candle produced situation here. So again, to me, the objective of above the 25% is this up close candle. It was met, then expanded. Then from that expansion, remember that it's still too early. Here, but me personally, it does showcase the potential of the higher time frame played out to go to the other direction by firstly attacking the bottom level of the fair value gap of this expansion, then to return to wick at the down close candle here. So it can produce an understanding of possibly the market could be expanding to the upside. So at this moment, it has not produced a signal for me to actually enter. So we move to the 1 minute. I know it's just a scary place for some people. I'm really on the 1 minute. So when we see the market enter, now we know even from the 5 minute there's an expansion like what takes up the fair value gap, which is here. Expands. Then me personally, 3 pips above where I'm looking to enter. So above that would be 8. It would be here. I would consider this as an order block because it's the lowest down close candle in the push. So it doesn't matter about the last down close candle on the expansion, because it can be, you can consider this as a down close candle. You can consider that. But for this push, it is taking out the fair value gap. This push right here. Some people might be looking at here to get in. No, I'm waiting for the higher time frame to showcase its interest the way it wants to go. So I'm not going to do out the risk to reward and everything, but you can just get a drift. So that's 2, so that's 88. So if I was to end the market, let's do a little fun. feel no way kind of seeing the opportunities that could possibly happen, because just how it is. It's part of trading, really. Can't afford to trade or just allow the market to dictate your life. So, right here, that would have been, let's say, 11 pips. From that, yeah, see the next expansion, but it's gone to the 25%. Even here, it wicked at down close candle, wicked here, showing its interest again, push higher. Then with this one, next expansion for a value gap, one can also enter on the 5 minute. Here, get tagged in here. That would be 145. So I would have had 2 trades on, one at 115, the other one at 145. And then could I have got something under 15? Nah, I'm looking for value gaps if you want to know. Just to see the expansion. Also, I consider a fair value gap has to be there while expanding for me to consider a order block. So in that case, this one again, from here to here, the low, the high, 3 above, 4 below, then got that, would have got that in. Then if I wanted to do overkill, also could have got this one here, 345, and then just let it ride. Where would I let it ride to? I think the place with most relevance would have been these equal highs, equal high from here, market returned, it's a rejection block also, could have took the high, the rejection block. First one would have been here, then probably here. I might have just got out at these two due to seeing it wicking here, so my interest will be, yeah, it's over. It's gone to the place I wanted, done and dusted. So, of course, could do it for shits and giggles. So 628 would have been my first one. Then I say 7 would have been another one, just for shits and giggles. Times 7, then times, I don't know. That would have been my possibly take profit today. But we move, it happens, life happens. And yeah, that is it. To beat frustration, it's just understanding the market in a deeper level. And it's trusting your system, your model, your strategy to a certain point where you just have faith in it. And you just know your strategy. You don't just believe it, you just know it. So once you stay in tune with the market, there's no issues. We won't hit a brick wall in trying to get profits like this, or even understanding the market like that, or even experiencing frustration. For me, In this instance, it's all about planning and preparation. That's all it is. That is it. Adios.